On the fracking front, a lot has happened since the 1980s. Number one, horizontal drilling technology has become very widely used. So the technology in identifying and locating enormous pools of whether it's tight oil or natural gas has become far more precise than it was in the 1980s, limiting the capital expenditures that you need to get oil out of the ground. Fracking itself has finally become a successful process in which this tight oil has been released. If you look at the increases in oil production last year, we had the largest single increase in daily oil production in the U.S. in the history of oil production in the United States. And again, just this morning it was announced that we're producing 9 million barrels. So there is a problem. If oil prices fall too much, it could slow down the efforts of companies who have invested heavily in fracking because they might be producing below cost. We'll have to wait and see if that happens. Some say it's $50, some say it's $70. It depends where, how, and which areas you're talking about that determines whether or not it's a profitable or unprofitable enterprise. The one knockoff that we could see that could be problematic is that there are a lot of high-yield bonds that have been used to finance fracking operations. If they should suddenly find that these are money-losing operations, we could have a little mini financial crisis in that area of the high-yield bond market. But that seems to me like not a low probability event, but not a systemic event either. And when you look at what's going on in the world, it's not just the U.S. where you can frack oil. I mean, there are places in China, certainly in Russia, although their technology is very, very far behind. Mexico. California's been untouched thus far. And some estimate there's $1 trillion worth of oil in the ground in California. Whether or not they go for it's another question. California has its own operating principles. Having lived there for 17 years, I know quite well Governor Brown. But the tax revenues from oil and energy production would be an enormous boon to California if they decided to go for it. So there are some vast differences between that experiment in the 80s. Just as Canadian tar sands in the 1980s were very big, and there were speculative stocks that traded on the Vancouver Exchange. They were absolute nonsense companies. And now the Canadians are extracting oil from tar sands quite effectively in ways that up until the fracking revolution, they were sending all their oil to the United States. We've stopped taking it because we have too much oil and we don't have the capacity to store it in Cushing, Oklahoma, where we keep all our excess crude. So technology changes, and if for, Robert Malthus, the economist in the 1700s in Britain, who kept arguing that Britain was going to run out of food because the population was growing too quickly, never took into account technological change, at the time global warming as well, that increased agricultural yields and made his demographic assumptions incorrect. And we see this happening in energy. 5 years ago was peak oil. Today we have a glut, and it seems like it will go on for quite some time to come.